What's going on, guys? Philip at Trade Genius. All right, I want to talk about this indicator in this video. It shows you the hash power on the network, and we're going to talk about what it means when it starts to cross over, like what we're seeing here. So we're going to look at that compared to the price graph. So we'll check that out. Guys, we just completed a nice trade, almost 20% on RLC BTC in the room, and encourage you guys to check out these specials. We don't mark these down as low as we have them for Black Friday. We do that once a year. But in addition to the cryptocurrencies that we do, we also will do binary options, and that we do every day. Here's an example. People are risking on a buy here, risking $45 to make $55. And we have an algorithm that tells us when the probability of that trade is going to be high for success. And these aren't very long trades. As you can see here, when we get into these, sometimes there's only 45 minutes left. Maybe there's over an hour, but usually under 2 hours at the most. And you lock in those profits. So every $100 of risk that you're putting out there, you're making 50% profit on that. So it's a very, very good way of making income on a daily basis and in a defined set period of time, unlike swing trades when you don't know how long it might take to reach the target. So anyway, I encourage you guys to check that out, tradelikeagenius.com. All right, guys, let's dive into this video.
Trade Genius.
All right, guys, so here's this indicator. It's called the hash ribbons. This is something that you can get off the TradingView indicators. Just add it to your chart. But basically what it does is it has two lines. One line is measuring the hash rate using a 1 month moving average, and then also a 2 month moving average. And what happens is if the 1 month crosses down below the 2 month, you get this signal, okay? And they're interpreting that as minor capitulation. And this follows the hash rate. Now, we talked about in the previous video difficulty. Difficulty will drop as the miners are pulling machines offline, miners offline, if they're not being profitable. So difficulty actually lags hash power. So if you want to see more immediate signs of, let's say, miners not being profitable, and then that ends up looking like this, where the hash power kind of drops off quickly and capitulates, then you look at what the hash power is doing, or what this indicator does is it measures a moving average, two moving averages, and if they cross over. So it's a lot like a moving average crossover. You'll see that traders will use that sometimes, where if the faster moving average crosses over the slower moving average, that's a signal that there's more downside coming. So with applying that to hash power, which you can graph in TradingView, you'll get the similar type of signal, and it's pretty reliable. So the way this works against price is, we talk about minor capitulation. You'll see that at the bottom of bear markets, and you'll see it also after the halving event. So if we scroll through the chart here, and we go back to, let's go back to the first halving here. Okay, so I'm not going to pay too much attention to the action here because it was early into the network, and hash power was all over the place, and so you got some capitulation after this first run up to $30. So that's kind of in line, but you had a couple spots of capitulation in here, which you don't typically see that type of capitulation one after the other. So I'm going to attribute that to just how young the network is at that time. But then we start getting into where the network's growing. We're starting to see more and more hash power enter into the network. And now we're starting to see, after the first halving, what we've come to expect is a capitulation after the halving. And the reason for that is because immediately when this halving date comes, which is going to be May of 2020, immediately the miner reward is cut in half. So they used to be making 1,800 Bitcoin a day. That production drops down to 900. So across the board, miners are making half of what they were the day before the halving happened. So a lot of times what will happen is they just have to shut machines off because the profitability just isn't there. So you see a drop off in hashing until price starts to catch up with that lack of supply. And then what happens is they start turning machines back on, because as price is going up, you're going to see more hash power enter the network because people want to get more machines online, produce more, grab more hash power, more hashing power, and make more money. So price keeps going up, you're going to see hash power follow. So what ends up happening is when these moving averages cross back over to the upside, see, most of the time, the faster moving average on the hashing power is above the slower moving average. That's 99% of the time. So you have these rare times when it crosses under, okay? These typically are periods where it's very profitable to get into Bitcoin, especially after halvings and at the end of bear markets. So you'll see this capitulation happen after the halving. And if we scroll through the chart, okay, so this is after a blow off move. That was our second top. China got into the market 2013. We topped out at $1,000, and then we entered a very long bear market. And we saw a couple of capitulations toward the end of that bear market. One was a capitulation of minor activity, and then you saw a wick low, which was actually the low of that bear market. Then you saw a lot of chopping sideways action, which you get at the end of a bear market before the start of the bull into the next pre-halving cycle, and there was another capitulation there. But again, if you're looking to get long, when you see these capitulation flips happen, and then you get that following green dot, that's typically a very good spot to get long. So here's the next halving 2016, and we see another capitulation event. And again, once that green dot fires, which is where these moving averages cross back above, then that's a good spot to get long as well. If we fast forward now to our last halving cycle, so our big blow off top around 20K, end of the bear market, we see a long capitulation. Miners were just shutting machines off. It was just wasn't profitable to run them. Difficulties dropping. So then when difficulty finally catches up and they start turning machines on, because if the difficulty drops enough, then it's profitable to turn machines back on. So the system kind of equalizes that out. And then we see price start to move up. That's more of a cyclical thing that we see typically as we get out of the bear market and start heading toward the next halving. So, and now we're at this current bar, which is, this is a weekly chart. We're starting to see this crossover. In fact, if we switch to a daily chart, you'll see that it hasn't updated yet, but if we were to go to, because this is an end of day chart, BLX gives us the most data, but if we were to go to just, Coinbase chart, you'll see that we actually do have a cross starting here. So I would wait for this to confirm on the weekly, but it's a heads up. And now we talked about typically in this cycle, right, before having that when we see a drop in difficulty, that in this point in the cycle, that's usually a bullish sign. So what you don't want to see is this show up on the weekly chart as capitulation, and you start seeing the crossover maintain and increase. That's just going to be something that would be unusual. I know we've only had 2 sample sizes on halving cycles so far, but this would be out of character. And if that does happen, then you have to ask, well, if that does happen, how long will it last and where would price go? A lot of times you have to look at what the raw cost of mining is. And right now, I think that's hovering somewhere around $6,400. So if this were one of those phases where this does roll over a bit, okay, then yes, we could see down to 6,400. Now, I'm going to wait to see how this plays out in the weekly, and we'll check in on this next week and see if that confirms. But if it does, it's something to take into consideration. Bitcoin at this point in time, it's at a pretty key level where I think that this also has a good chance of being the bottom. So this might just be a false alarm, and we see what we typically see will be a slight momentary reduction in hash, and then we see things pick back up. But that's really going to follow price. If price can find a bottom here and move up, then I think we'll see this reverse and things will be okay. If not, then I think you just have to know that for your short-term trading, swing trading, and things like that, the risk would be this rolls over and we might see that 6,400 level. And only because that would be kind of like the floor of the mining costs. And that's typically where price finds the bottom on these types of setups. Okay, so just bear that in mind. Just something to be aware of. I'm not saying that this is going to happen or it's going to roll over to 6,400, but it's just if this continues, if this turns into one of these deals here, and I think this might be a lot more comparable to what we saw in 2016. And the reason for that, guys, is because we came out of the bear market unlike any other time. This exit out of the bear market got way ahead of itself. We've never seen a bear market exit like that in the previous 2 cycles. So what we might be seeing is this is actually reflective of what we normally would see post halving, but because we had such a big run up, right? And the theory there is we're running up fast, so miners are adding capacity online because they want to catch this revenue, right? It's very profitable and prices running up into toward the 14,000 mark to add machines on. So they're kind of slow to the party getting machines online. Then prices kind of hovering above 10 grand, and that's okay. But then price starts to now fall back, get lower. So some of the weaker miners will start basically throwing in the towel on some of their processing power because it's not profitable for them. And the weak hands and the miners get shaken out. So we might just be seeing where this usually doesn't happen pre-halving, but because of the severity of the move out of the bear market, we're getting kind of one of these type of post-halving moves because the price action has cooled off from such a rapid run-up. And so it's triggering this capitulation signal now before the halving, whereas typically that would have been post-halving because we would have had usually more of this type of move as we got through halving. Okay, so it just happened sooner. So I think it's probably more along the lines of what we see here, which is a brief capitulation period. If this does span out, this does confirm on the weekly, and we go into a couple of weeks of where it's like this condition, when you get that green dot come back, that's going to be a big time buy signal. And I don't care where price is at that point, but that's how I would view that if this continues to roll over. Okay, so there's my take on that. I think it's an interesting indicator, definitely one you should probably have up on your charts. Again, we're starting to get the signal on the daily, but not on the weekly, and I'm going to look for the weekly to confirm this current signal. All right, guys, that's it for this video. I hope that helps. Again, if you're interested in what we're doing, please head over to Trade Like a Genius. Check out those packages we got. Join us in the room. We're making money every day, lots of trades, and all of our systems are very profitable. So I think you'll find that even on the $2.99 package, well worth your while for a year access. Thanks, guys. I appreciate it. I'll see you in the next video. Take care. Bye-bye.
Trade Genius.